Good morning, a Monday morning for me. I think I'll start with a comment on the Gary video that I put up. I put it up obviously just for amusement because it was such a load of nonsense. But I realised this morning, I got the vibe anyway, that there'd be a number of people that watched it and thought, basically ignored the content and appreciated that the emotion was correct, as in there was anger in there, and you thought that there's something about this economic situation that anger is the appropriate emotion. So, quite like the video, I don't know, it's hard to say, there weren't many comments. But I realised in the end that there would be very few people that found it as amusing as I did. And I missed there, basically, the whole idea was a miss, because I get the vibe that quite a lot of people just went with the angry part of it and thought, well, at least somebody's being angry about this, and basically the facts irrelevant whether they're correct or not. But anger is the correct emotion. So, in a way, applauded the video. And again, I should have known before, not about the reaction to that video, but this is the way that people do act. They act on emotions and not on facts, I suppose, would be the boring thing to say on the other side of it. And if anything really happens ever of this economy thing, raw emotions probably will be the end point, where people are just being angry. They don't really know why they're being angry. They just think that being angry is what they should be doing. And so when enough people do it, anger is a very easy thing to elicit from people. Anyway. Right, let's go on to this. First one. Mortgage originations at the four big banks in the United States of America increased 37% in the second quarter from last year because of the expanded Home Affordable Refinance Program, HARP. Wells, JPM, BofA and Citi wrote $205 billion in new mortgages. Originations also increased 7% from the first quarter. Wells is the one that's really writing most of this business. The Federal Housing Finance Agency expanded HARP last year to eliminate upfront costs, negative equity caps and some purchase risk on the original loan, pushing more business to the largest banks. It's the end of America for today. But in the end of this presentation, we get to what I think's the big important bit. Argentina, inflation-linked peso bonds take a dive. Argentina's clamped down on foreign currency purchase. I'm going through these quicker than I planned because I wasn't really planning to say much or really anything about Gary's video. On the surface, the bonds look attractive. They give inflation-linked 14.3% plus the official annual inflation rate, but the official annual inflation rate is 9.9%, but the current annual rate is probably closer to 25%. Forget about the bonds. Basically, Argentina is running into terrible trouble. Over in Europe, but quite representative, but especially European banks, these are the share prices, stock market prices, equity prices of the banking sectors in these European countries. Going back to 1999, you can see they had an awfully good time in about 2007, where they were up generally about 100%. But at the moment, we've got French banks are still up. Those are the grey ones. The French banks were up huge. Now, this is what should start alarm bells rattling, because why were they up huge? Because they were taking on huge risky bets, and they're still hidden on the balance sheets of the French banks. But they're not realised yet. The trouble is with Spain and Italy, Portugal, Ireland and Greece, Slovenia, obviously. But the bet for the moment is that as long as people are concentrating on Spain and Italy, France can just keep it quiet for the moment. So French banks are actually up 12%. Spanish banks are only down 12% because, again, they've been hiding their losses in dodgy accounting. US banks are down 30%, British banks are down 30%, German banks down 50%, Italy banks are down 2/3, 67%, and Greek banks down 93%, Irish banks down 97%. Number 4, Euro drags down Slovenia. Slovenia's slipped into the Euro thinking it was very clever. Slovenia's hopes of avoiding becoming the 6th Eurozone country to require a bailout could hinge on its ability to access international capital markets, and the article in IF shows that they will not be able to do it, and probably will either have to try and issue in dollars, and if they can't get the dollar borrowing away, to a country like China might want to go into Slovenia if they borrow in dollars, but you can imagine borrowing in a currency that's not your own, always a very dodgy thing to do. If they can't get that away, then they will have to go to be, they say, the 6th country to go for a bailout. Ambrose Evans Pritchard, in this article you can link and read, was doing well again, being angry in a controlled way. Demand for Spanish paper is collapsing, even for shorter dated debt, which is very worrying and raises the spectre of Spain losing market access, says somebody from somewhere or other. And somebody from somewhere or other else said the markets are already bracing for a second bigger rescue, this is Spain, of around 400 billion euro. A few more weeks like this and Madrid is going to decide it has nothing more to lose and call for a full sovereign bailout, he said. Then we will find out if there really is any money in the EU kitty. There isn't at the moment. If the ECB goes on holiday, that's the ECB, the European Central Bank, goes on holiday without doing anything more, this is going to snowball. We're way past the point where any country can deliver fiscal measures on its own. People are not going to buy Spanish and Italian debt right now, whatever they do. There has to be a circuit breaker. The ECB can really only be the real circuit breaker, with its ability to buy whatever it likes. Except it hasn't got that ability, because the European Central Bank wasn't built with that ability. It had constraints put upon it, where it can't go doing that sort of thing. But they'll have to change its abilities, or whatever he said. Things are going to turn awfully nasty. Our friend Benoit Cœur again, cutting the deposit rate on European Central Bank offers. Cutting the deposit rate the European Central Bank offers lenders in the Eurozone below zero is an option, ECB Executive Board member Benoit Cœur said on Friday. The ECB cut its main interest rate earlier this month by 1/4 of a percentage point to a record low of 0.75. That's the central bank, what people call the interest rate, put down to 0.75, and reduced the deposit rate it pays for banks parking money with it overnight to zero. That was the reserve. Actually, the deposits have always paid zero, I think. I think that's just written badly. In an effort to boost the flagging Eurozone economy. Yeah. Speaking in Mexico, Cœur, I'd like Cure, but there's no accent on it, said the bank needed to take the rate down to 25 basis points to zero to match its cut in the reference rate. He said policymakers would need to consider whether it could take the deposit rate below zero. any money put at the central bank below zero, which would mean that central bank would start charging banks for the privilege of parking spare cash in the ECB. Now, presumably they do have the right to do that, because nobody would have thought ever to restrict them to not doing that, because it's such a wild thing to be doing. So any money kept at the central bank, banks would have to pay to keep it there. And he works for them. He's the executive board member, and he's floating this as an idea. Now, this article in FT Alphaville is well worth reading. One of the things that I liked about it is, well, would the banks, it floated this as an idea, would the banks then just change everything to cash, actually wadges of cash, and find vaults that they could stash huge quantities of cash in there, the banks? Because why lose, guaranteed to lose money, putting it somewhere else? But this is where the real economy, the pyramid, remember the pyramid, and we deal in the top bit in the real world, below it where the real big money is. This is where they're getting sniggle-snaggled at, and they're just desperate. They were desperate to get 3, 4, 5% interest in the old days. Now they're desperate just to hold on to their money at nothing. And if they can get a fraction of a percentage, well, that's good. Just think money market mutual funds. So this is from the Financial Times Alphaville. Would negative short-term rates under current conditions spur people to spend more of their income and institutions to invest more of their retained earnings, or to seek credit from banks and capital markets against their future income and earnings? Would banks and bond investors give them the money? Now, really, to understand this, you've got to read the whole article, and I'd recommend it because this is the world that we're moving into. It's the world that Keynes wanted, but I don't know that we're really prepared for it. Maybe, but it's just as possible to imagine how, regrettably and almost perversely, negative rates would actually make things worse. How would they lead to higher demand for money itself? Question mark. It would lead to deflationary expectations. We've heard so much about inflationary expectations. Now we'd be talking deflationary expectations. If you knew that your savings vehicle would give you less money than you put in and didn't see any superior alternatives, in other words, you are blocked here, then it wouldn't be unreasonable for you to choose to save even more money. Another of these paradoxes, because you're going to lose a certain percentage of the money that you've got saved. You'll be tempted, if you can't move that to somewhere where you can get more interest and go positive, you'll be tempted then to save more money to fill that gap at the end of the year. Not everyone would make such a choice if rates were to go negative, but these are unusual times, and the point is that the perceived existence of better alternatives cannot be taken for granted. The world interest rates are flattening to zero, and it has ramifications, and deflationary expectations is one of them, and if you read the link in the article, there are so many more. It's becoming even more interesting. You can get angry about it if you like, but I'm not an angry sort of person, so I don't. So I just think it amusing when people get angry about things that they don't understand. I prefer, it seems, looking at myself from here, that I just prefer to try and understand it. And if I ever get angry, I just get angry at myself for not understanding it. There's very little in the world that it's ever worth getting angry about. Sometimes it's not even worth getting an understanding of it either. That doesn't help. But getting angry, I don't recommend it. But if it's in your character, in your nature, then obviously there's nothing you can do about it. Bye.